Welcome to Big Money Monday on the Savvy Radio Show. Get ready, you are about to get paid. This show is designed to increase your financial intelligence every Monday.
All right, Savvy investors, it is Big Money Monday. All right, we're starting off the episode with Big Money Meech. He is a long-term friend. He is speaking at the Investor Weekend. I speak to this guy. We are co-coaches. We coach each other at least 3 to 4 times a week. He has grown tremendously since we've connected. It's not been my coaching. It's been on his own diligence of getting it done. But I'll kind of give a quick intro. Meech and I, his name is Greg Meech. He's in Houston, Texas, and we met about 3 or 4 years ago, I can't remember, in Nashville at the Mr. Landlord Conference. It was kind of interesting. I was checking in the hotel, and he was standing behind me, and I turned around and said, hey, what are you doing for lunch? And next thing you know, we became fast, long-term friends, and it's been a roller coaster ride. So that's how I met Greg Meech. And his biggest dilemma that he kept saying is that he was tapped out. Not that he was tapped out economically, but he couldn't borrow any more money because he had exercised the limit of FHA loans to 10. Is that right? At the time, he had 10 loans?
Yep, Stephen, that's exactly right.
And I was like, no way, Jose. If I can raise money, you can do it. We were argumentative. You're like, no, I can't do it. And I was so excited that I wanted to prove you wrong. And that's how our relationship started. My goal was to prove that you could raise money. And I said, community banks. And then so walk us through the process, how it happened, and, your first, obviously you got belief from me. I challenged you to go do it, to do these key steps, and you went and did it, and you were dumbfounded. And then we'll have part 2 of this. We'll go into Oklahoma City, but walk me through what happened. You were kind of bummed. You were going to Mr. Landlord Conference trying to figure out what we were going to do in real estate, and start off how you became a landlord.
All right, Stephen. Well, glad to do it. I became a landlord accidentally. I mean, I always had the passion to be a landlord and to be a real estate investor, but I had no education, no knowledge, didn't know anybody that did it. And, when I moved away and moved out of my mom's house and was on my own and going through my career, my mom had an incident to where she got cancer, and, she got to a point to where she couldn't take care of herself and pay her bills, and she was about to lose her house. So I started paying her bills for her. That's what a good son does. And then, of course, when she couldn't live by herself anymore, I still paid the bills for her. And next thing you know, we decided to say, well, I've been paying the bills long enough. Let me just buy the house from you. So that was my first way of buying a real estate. It wasn't a very expensive home. And my brother was living there, and I just paid the bills. And next thing you know, the house is mine, and paid the bills some more. And then, when she passed on, we had to do something with the house, and we really wasn't in condition to sell it. And I thought, you know what, I should be a landlord, because that's great. You could make a lot of money and not have to do anything. So with the uneducated knowledge, I just jumped right in and put the first person in there that was willing to pay me rent.
Now,
so obviously that was a huge mistake, right?
Yeah, well, we know that now. But you're an absentee landlord, right? Were you living there? And this home is in Florida, and you live in Houston. You still own that property today. When you first acquired that asset, were you living in Florida?
Yeah, I was actually living in Florida, but I was on the East Coast, and the property was on the West Coast. I had lived there myself, when I was a teenager. And then when I moved away to college in my career, I was a few hours away from the property, so I couldn't really take care of it that well. But I was an absentee landlord, and then soon moved to Texas. And, of course, the property was in Florida, so that made things even more difficult. So I bought it from my mom and lived in Florida for about a year later, and then I moved to Texas. So I was an absentee landlord living in Texas with my first property over in Florida.
So then it wasn't too bad. It kind of cash flowed a little bit. How did you acquire your other properties? What gave you the desire to be an investor?
Well, probably the first 4 years, I did everything wrong. I got no education. I read no books. I just thought, hey, it's not rocket scientist. You get a property that costs you $500 a month. You charge somebody $800 a month. You pocket the difference. You call yourself an entrepreneur and you're good to go. So, I did everything wrong for the first few years, and I had to evict people, and they trashed the place, and I'd have to repair it. And basically, I was so resistant to learn how to manage the property and to be a real investor. I just wanted easy money. I didn't want to have to do any work. I just wanted someone to pay me easy money. And I was forced to keep it because of the housing crisis had crashed, and it was, worth less than what I owed on it. So I was forced to learn how to be a real estate investor. And when I did, and it took me a few years, when I did, I sent it to my CPA at the end of 1 year, and he said, "You're doing really good with your real estate." And I said, "What are you talking about? That thing's a piece of junk. I wish I could sell it." And then we, looked at the numbers, and I thought, wow, that's my best investment in my entire life. So at that point forward, I was forced to be a landlord and forced to make it successful because I could not sell it. So it's either lose money every day until you learn how to stop losing money and make money. And when you learn how to make money, it's pretty addictive. You want to learn how to make more money. So living in Texas, I thought, you know what? I'm going to buy me some more rental properties because now I know what I'm doing.
And so then you just went gangbusters. And how long did it take you to build, like a $1.5 million portfolio? How long did it take you to get there? When you got to Texas, how was the process? How long did it take?
Yeah, it was, the economy was slowly recovering, and prices were all lower than what the market value is. People still needed rent. So we had high rent demands. You had very low property, good values on properties. And, I didn't know what I was doing. So I went to a bank, Bank America, said, "Yeah, I want to buy a rental property." And they said, "Sure, you got good credit. Just give us 20% down and find a property, and we'll get you financed." And that's basically what they did. So I did that. I went to a realtor and said, "I want to buy an investment property, something to rent." I saw a home, foreclosure sign on it, and called the realtor, and she said, "That one's sold, but I work with investors." So I thought, really? That's great. Sign me up. Yeah, let me be your investor. Find me a bunch of properties to buy. And, I did. And I just followed that path and quickly learned very quickly how to get better deals. And first, pretty much paying retail pricing on it, but the market was such a good price that you could cash flow with retail. And then, as I got into the industry, I networked with some more people and found much, much better ways of doing it. But probably over a 3-year time period in Houston, I lived in one property, my primary residence, so I had a mortgage on that. Had a mortgage of the property in Florida, so I got 8 more properties in about 3 years. And I put a good amount down, 25%. I rehabbed them like an idiot. I did most of the rehab myself initially, and paid for all that out of pocket. So it was a lot of cash out of pocket, but my returns were still pretty successful. So I was pretty happy about it.
So you kind of been going through this. It's a good investment. Your accountant tells you. You're finding deals. You're almost fumbling into this. It's amazing to hear the story because I know where you are today, which is incredible, and I think it's an incredible story. But what drove you to fly from Houston to go to a Mr. Landlord conference? What was your motivation behind that?
I had done the local, what we call RIAs, or real estate investment clubs in Houston, and I learned so much when I found those. I was amazed. I was able to find people and network with people, and I learned so much, but I kind of exceeded that. I wasn't learning anymore, and I just wanted some more information. And I went to some message boards, and I saw a lot of and I was just searching on the internet for more knowledge on how to buy more homes past 10. And I came across some message boards for Mr. Landlord. And once I started reading those just for a Google search, there's some really good knowledge in there, some smart people, and they are all talking about going to the the annual conference. And I thought, man, I got to go to that. And it sounds strange. I mean, before, my goal was always not to spend money, but then once I learned how to make money, I wasn't so interested in not spending money. I want to learn how to make more money. So buying a hotel and an airline ticket to go to a weekend conference, I didn't hesitate to do it. I was one of the first ones to sign up, got a free bonus for signing up. And you know what? If it was a big waste of time, it would have been okay, but it ended up being very, very valuable. Heck, like you said, I met you checking in right at the hotel, and the amount of knowledge I learned before the seminar even started was amazing.
Well, I mean, I know we're like best friends. I mean, you have And today, February 18th, 2016, you just closed on a 198-unit apartment building. I mean, I think it's intricate that you had that support team around you to go do it. I think one thing led to another, and I feel the same success from you. I wouldn't be where I am today with my finances and grinding it out as an accountant. But anyway, I'm just excited for you. So let's rewind. So a couple of years ago, I challenged you, dude, you're dumb. Of course, I said it probably more abrasively. What's wrong with you, dumbass? Go out there and get freaking money, and you can. And so you started knocking on doors. So tell us about that. How did you raise community money?
So my system was down pat. I knew I needed 25% down. I knew what the interest rate was going to be. I knew I had to get a mortgage locked in for 30 years, and, no one could do anything. And, it was a great system, but, the government said you can't get more than 10, because I come to learn that these were government loans. These are Freddie Mac and Fannie Mae loans, what we call conventional loans. And, they'll let you borrow the money once you follow their rules. But then the rule stopped at 10. And I said, well, I don't want to stop at 10. I want 11 or 12 or 200. And, every corner I went was told, no, you can't. All the real estate club told me, no, you can't. And, everywhere I went in Canada, I had heard portfolio money and lenders like that. And I called Bank of America and Wells Fargo and a bunch of other banks. And, I got nowhere on it. So when I was at the landlord conference and I met you, the first thing I talked about was my biggest failure was I haven't bought a property in over a year. And you said, why? Why'd you stop? And I said, I can't get any more loans. Can't get any more mortgages. And you blew my mind. You said, what are you talking about? I've got 75 mortgages or 50, whatever you had at the time. And I was like, what? How can you have, people said I blew their mind when I told them I had 10 mortgages. People are like, you can only get 4 mortgages. How'd you get 10 mortgages? You can't do that. You can only get 4. And I felt like the rock star going, you guys don't know anything. You can get 10. You just don't know the right way to get them. And then everybody tells me no for over a year. I didn't buy a property. And then I run into this Steven Van Kallenberg guy who knows it all. Says, I've got 60 mortgages, 70 mortgages. What? That blew my mind. So let's go have some lunch. How does that happen? That was my biggest obstacle. And of course, when you sat me down and said you're doing it all wrong, you're going on the wrong path. This is a path that you need to do. And it really reinstated the value of education. I mean, if you just knew the path, if what I know now I could share with my son who's not even in high school yet, path that works, think of all the wasted time that you wouldn't have to go down. And that's what you did with me, Stephen. We met, you took an area that I knew nothing about, and you gave me a direct path. And, it wasn't even 6 months later, I'm getting mortgages outside the federal government, buying more properties again. So that was pretty significant change.
So I remember that you went to one bank and they turned you down. And then you went to another bank and they said they were going to give you $500,000.
Yeah, so once you gave me the direction and educated me and showed me on the path about portfolio money and the right terms, the right language, talk to the right people, and it was pretty easy. I went to 2, and one said, yeah, we're totally interested, and submitted all through them, and they came back and said, the board decided we don't want to do single families, but we'd be happy to give you a commercial mortgage. And I said, what do you mean a commercial mortgage? I thought that's what these were. And they said, well, more like for commercial buildings like retail or multifamily. I said, oh, you would give me a loan for that? And they said, sure. I said, why not single families? And they said, well, the board just doesn't want, that assets on their books. I said, oh, okay. I went back and told you, and you said, well, go to another bank. All right. Well, I went to the second bank, and they said, sure. How about $500,000 to start? I said, really? Really? $500,000? Sure. I mean, if you need more, let us know.
It's just amazing that you just acquired a $3 million asset. I'm so excited that I just want to tell the world. All right. So then you get $500,000, a lending limit at this bank, and then the next phone call you called me, you're like, great, I got $500,000, but there's no deals.
Yeah, that's a different one. Then the market started to change a little bit, and the sweetheart deals that I like, those were starting to dry up, and Texas was going crazy, and my business model, which was through these exact lines, all of a sudden it changed. The prices changed, the people changed, everything was highest and best offer, and I thought, I'm used to paying $35 a square foot. I can't pay $50 a square foot. What the heck do I do now? My business model has been destroyed. Steven, what do I do now?
And so, which was really cool, we both agreed to go balls out and try to borrow money outside the state, because that's been one of my goals. I interviewed a guy, Jason Hartman, and he has loans and properties all over the country. And it blew my mind. Like, I was so insecure, I didn't think it was possible. So I used you. You didn't know this. And I'm like coaching you and saying, Meech, go do it. Let's buy houses in Oklahoma. And sure enough, that was like the second or third bank. You got $500,000.
Yeah, no, it was no problem. Just had to go up there. We did everything on the phone and networked and built a relationship very quickly. Met face to face, and the banker took me out to lunch and spent a bunch of money on a good lunch for me. And then they went back to the board and gave me $500,000. At least approved $500,000 for real estate. And went to my friend Steven, who had a bunch of houses here, and put one under contract, and it was the easiest transaction I ever did.
And you just sold it. So let's give some tips to the other investors that are in your position that have a decent portfolio. You're maxed out 5-10 units. How did you approach the bank? What did you say to the bank? Were you nervous? What was the key factors that you can remember? I know this was a couple of years ago, but try to help someone right now.
Right. So one thing, the difference is you got to understand, we call them conventional mortgages and then commercial mortgages, or I don't know the right terminology, but, your conventional Freddie Mac, Fannie Mae mortgage, there's a lot of restrictions on those, low interest rates, but a lot of restrictions on everything. And then when you go to these commercial loans or portfolio loans for single family homes, the bank is using their own money. They're not using the federal government's money. So they have a lot of stipulations, or a lot less stipulations than what the federal government does, because when they make the loan, they got to keep it. Unlike when you go to Bank of America and you make a loan, or Wells Fargo, or some other location, they're really just putting your loan together to give it to somebody else. So once you do that, you got to stop targeting those big, massive banks, and you got to go to what you taught me, which was community banks. So once you go to the community banks, you tell them, you talk to and gosh, I don't know, it's been so while since I've done this. It just came so easy for me. But you just let them know that you're, interested in a commercial mortgage department and that you're looking into portfolio loans, and you got to talk to the asset manager or whatever that bank has. If you call up a bank and you say, yeah, I want to talk to them about getting a mortgage, that's the wrong thing to do, because they're thinking retail mortgages for your primary resident. You got to come all up and say, I'm interested in looking for loans for commercial loans.
Yep.
When you talk to the person,
or a vice president, usually senior vice president, and you got to walk in there like you know what you're talking about. You probably have got to do a couple of deals to really borrow $500,000. I'm assuming.
Yeah, if you got no experience and you haven't had any, no real estate, you haven't managed any real estate, you haven't had any single family, and you walk in and say, give me some money, they're not willing going to do that. But if you walk in there and you got a PFS, a personal financial statement, that's the first thing they're going to ask for. And it's just a resume of your finances. It says, I own this much, properties are worth this much, this is how much my debt is, this is how much my income is, here's my net worth. It's just a one-page resume or a two-page resume on your finances, and let them know what you're looking for, because you should shop around for them. They make money by lending you money. So you don't walk in there begging for money. You don't walk in there and say, yeah, sure, I'll take anything, anytime, anywhere, any place. No, say, I'm a real estate investor looking to expand my portfolio. I've got, $1.2 million worth of assets right now in my single family portfolio, or maybe $400,000 in assets. And we're looking to expand, looking for another $250,000 or $500,000 to buy an additional 6 assets this year. What kind of terms are you guys offering for single family assets? And they said, oh, okay, well, Mr. Meech, come back and sit in my office. Well, what are you looking for?
Yeah,
well,
perfect. You said all the right words: portfolio, asset, building. I love it.
Now, if you walked in and said, yeah, me and my brother, he's my best friend, and my brother, there's this house across the street that's foreclosed on, and we were thinking about buying it and renting it out, can we get a loan for it? Well,
yeah.
No.
Totally different agenda. Okay, so let's talk about, we've had this, if you can remember this conversation, I actually called you and said, hey, I thought about changing my business model, and you slapped me in the face, and you said, don't change your business model. Whatever you're doing is working. And I was like, agree. And I was going to go into hiring homes. And the money was so attractive on Fannie Mac and all that jazz, but the paperwork is outrageous. Compare the paperwork from a commercial loan to a regular, traditional, conventional mortgage loan that's sold in the secondary market.
Yeah, the paperwork on a federal loan is outrageous. I mean, there's a massive amount of rules that they have to follow, and you have to verify everything. So you have to verify every W-2 check stub. You have to verify your checking accounts, every deposit inside that checking account. I mean, if you got an electricity award check for your electric company that gave you back $99 for buying electricity over the last year, and you deposit that in your account, you have to tell them what it's for and verify that funds. I'm a family of, one child, and my wife didn't work at the time, and we had to get a certified letter saying how much we spent on child care, and it was zero. So we had to get a certified letter saying it was zero. We need every check stub. You need every bill that you've had, everything, all your tax returns. I mean, it's extensive. And if your debt to income ratio isn't exactly correct, at one point I had to cancel some credit cards just to get the loan approval. I mean, it goes on and on and on.
And even with a 20% down, 25% down, you still have to go through those hula hoops.
I did. And then the property cannot be in bad shape. I lost the property. It was a HUD foreclosure home. I put $1,000 non-refundable down on it. It was a fantastic deal. I was so happy to get this property. And when they did the inspection, the person that got foreclosed on was so bitter and angry that he took everything with him. And I mean everything. He took the blinds. He took the hot water heater. He took the kitchen cabinets, the kitchen sink, the kitchen island. He took all the interior doors, not the exterior doors. He pulled up the laminate flooring. And the house was in perfect shape. There was no damage to the house. And, of course, I got a fantastic price on it. I paid $1,000 non-refundable. I paid $500 for the appraisal. And then the appraisal came back as uninhabitable because it had no kitchen sink and that the plumbing was just cut off. No big deal. A plumber can fix it for $100. And they denied my loan after I paid all my fees and escrow and application fees and, title and insurance. They said they don't rent for homes like that, or they don't approve loans for home like that because it came back inhabitable. I was furious. I'm like, well, I'll fix it all in 30 days. I'll fix it all in 10 days. I'll fix it all in 7 days. Nope, can't do that. Doesn't fit into our box. And I said, well, you know what? Just hold back an escrow, hold back $5,000, and if I don't get it fixed, you can keep it. Nope, doesn't fit in the box. I said, all right, well, how about if I have the seller put just a kitchen sink in there? And they said, then we'll have to do another appraisal. So I went to seller, which was the HUD. I said, hey, can you guys fix the kitchen and increase the price by $1,000? They said, nope, doesn't fit in our box. So no matter what I can do, it doesn't fit in the box. And you can't call the federal government and say, hey, can I have an exception on this? So their loans are for retail customers, primary residents, with a small little caveat for investors. And if you want to do anything that's not exactly in that box, you're wasting your time and it's not going to work out. But when you go to a portfolio lender, these are real people. You call up the bank manager, the vice president, and you tell him, and he'll go, yeah, that's fine. Yeah, we can do that. Of course. I mean, you deal with a person that can make the decisions. So you could buy a home that's been trashed and needs rehab or needs a new roof or has a cracked foundation, and you can get a loan on that. The home doesn't have to be in rent-ready, perfect condition in order to get a loan on it. And that right there, opens up a world of opportunities.
Yeah, opportunity. Now, also with commercial money, you can do no money down. And didn't you do a no money down deal in Oklahoma?
I did. Amount of the purchase price and closing costs was all in. The appraisal came back. They were going to lend us 75% of the repaired value, and they went in, and the appraisal came back right at 75%. So I got a loan for the exact dollar amount and had no money at closing. Now we put the repairs out of pocket, which is fine. It was a small amount of repairs. I think it was like $8,000 in repairs, but it's basically a no money deal. You just sign on the dotted line, you sign all the paperwork, and they hand you keys to a house that you now make mortgage payments on at 5% interest rate. No money down.
That's awesome. I don't understand why people don't do this on a regular basis. Like, you can grow and leverage and have infinite returns with a commercial bank.
Absolutely. So if you buy a property, now you can't buy a nice, pretty house that's perfect condition because you're going to pay full price. And if you do, you'll have to put your 25% down because they're only going to lend you that 75. And, there's nothing wrong with doing that. You can still do that. The bank would love you for it. but you can buy homes that need a little bit of TLC, maybe need a roof, maybe need some interior redone on it, and you can get that amount reflected in the purchase price. So, you'll end up, if it was for round numbers, $100,000 home, you paid $75,000 for it, and as appraisal comes back at $100,000, you get the home and you don't have to put no money down.
That's awesome. All right, Greg, it's been an outstanding roller coaster ride. I'm going to definitely have you back on the show, talk about how you came from 10 units, raised several $1 million, and purchased 98-unit apartment building with less than 10%.
Actually, 104 unit apartment.
104 units. And you're coming in March?
I'm coming in March. And since we're talking about loans, my first apartment, 104 units, I got a $2.5 million loan, and it's non-recourse. I didn't even have to sign any personal guarantee for it because that's what commercial lending does. It gives you so many more options than what federal government does.
All right, so let's blow people's mind that you actually syndicated that money. You have a $3.2 million, is that right, apartment building, 104 units in Orange, Texas, and you only have, now you have a lot of sweat equity in it right now, but you only have $100,000 and something of your own hard cash in it.
Yeah, originally the plan was I was putting up $125,000 of my own money. I was bringing investors, other investors, what we call passive investors. They were putting up the rest of the money for the down payment and the rehab. And then we're bringing the bank to bring the rest of the money together. So I put up originally, I ended up putting some more just because I wanted to. I had some extra money at the last minute, but the original deal started with me putting up $125,000 cash and the rest all coming from banks or investors.
Think about that. Just from couldn't get a loan, now you have a 104 apartment building. And did it require a degree?
No degree. You could drop out of high school. You just got to be able to read contracts. You got to be able to negotiate. You got to be able to follow the rules and build relationships. But no, you don't need a degree, and no, you don't need a lot of experience. And I didn't have an apartment building before this, and I just said, well, I'm very successful in my single family, and that was good enough for them.
Dude, I'm super stoked and super proud of you. I cannot wait for you to come to Oklahoma City March 25th and 26th. What are you going to share? I mean, this is your first debut on a stage as a real estate investor. You're not a guru. You're not selling anything. You're just selling the truth. Have you thought about what you're going to talk about?
Yeah, so I'm going to talk about, so the good news is I got nothing to sell you. I'm going to be on stage with one purpose, and that's to give you knowledge that I think will help you benefit your real estate career. And I think one of the biggest mistakes that real estate investors make is they don't take the time to properly measure the performance of their investment, of their asset. And it doesn't take that much work, but the power of being able to measure your asset allows you to stop making emotional decisions and allows you to start making strategic decisions. And without information, without knowledge, without details, then the brain automatically defaults to what feels good. You've heard this 1,000 times. Well, I'm just going to pay it off. I'm going to pay off my single-family home. That way, when I retire, I don't have to worry about a mortgage. That's an emotional decision, and that's because you don't have information that you need to make a technical decision. But a more savvy real estate investor that could look at detailed information about that specific asset and the performance of it, maybe come up with a completely different decision. So I'm going to talk about the simple things that you can do to make good decisions, to make better decisions on how to operate your asset. Because if you got the right information, it's just glowing in front of you, and anybody can do it. It's not hard making the right decision. It's just hard getting the information to make the right decision. And I'm going to show you some techniques so that you can get the information, and it's going to be so obvious. You're going to go, oh, of course I'm going to do that now. So that's what we're going to talk about.
That's awesome. Man, I'm super stoked. I really appreciate your time. Can't wait to see you. It's a little over a month away. But
I'm excited. Can't wait to be there.
All right, Greg. You have a great day, man.
Thanks, Stephen.
Investor Weekend is not far off, with over 10 information sessions to increase your portfolio. Log on to www.investorweekend.com. Whether you are a seasoned investor or never purchased a property before, you don't want to miss the Investor Weekend. Join us for a powerful, knowledge-packed weekend with over 10 informational sessions that are bound to enlarge your real estate investments. You will hear from the best national and local real estate investors that will share practical and relevant experiences with you, the investor. There will be several networking sessions to connect with other like-minded people for potential funding, partnerships, and yes, hot deals. Go to www.investorweekend.com. Did you know we meet once a month for the Landlord Lunch Meeting? The third Wednesday of every month. Go to landlordlunch.com.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.